So start of the year, Maple's TVL or AUM was around 450 million. In that time, it's grown about 8x to where today it currently sits at 3.6 billion. And this is across all of our products. Most of that growth, as you alluded to, Nomadic, has come from the syrupUSD product, which is our DeFi-facing product, and that's over 2 billion in AUM by itself. On the revenue front, so just to tie the TVL back to revenue, so start of the year, we're doing about 400K a month, and so that would have equated to just under 5 million annualized. Fast forward to today, so at the end of August, we did over 1.4 million. So that was our largest single revenue month ever, and now we're on track for around 17 million ARR today, with a target of trying to get to 30 annual recurring revenue by the end of the year.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show spotlights Maple Finance, the world's largest asset manager on-chain.
My goal going into this one was, I think people are fairly familiar with who Maple is now in DeFi. They're one of the blue chip leaders in DeFi, and I wanted to focus on maybe a little bit less on where is Maple right now and more where they're going and what are Maple's next moves. And I think we were able to get a lot of that on this one. And I think they shared some alpha that I don't even know if is fully released yet.
Yeah, what's made Maple unique over the years is we have this permissionless side of the business with syrupUSDC. That has grown now to over $1 billion in market cap. That's their liquid yield-bearing stablecoin. It's being looped up on the likes of Camino and Jupiter Lend. But then we have the other side of the business, which mirrors more of a traditional finance business where they have a book of business of borrowers, and those folks are putting up collateral. These are still over-collateralized loans. And I think that there's a BD machine behind the scenes that we appreciate, having known the team for years. But I think the average DeFi user might not be aware of it. And I think that's a part of like the magic behind Maple and why they've grown so much.
Yeah, and we spoke to Joe on a previous Maple podcast, and then today with Sid. And another takeaway is just both these co-founders are incredibly locked in. Like, Sid knew every facet of the business inside and out. And I know that maybe sound like table stakes, like, oh, well, the founder should know what's going on. But I think honestly, to a degree that, you know, we talk to a lot of people on this podcast, and he's at a level of locked in that I don't think you see quite as often.
Yeah, I think Sid sets a standard. And if you're an investor, whether you're doing, private market deals or whether you're just, you're buying liquid tokens, this is a podcast that should remind you of the standard of founder that we should be looking for out there.
Right near the end of the podcast, I asked a question that, is kind of like, I kind of thought it was maybe more of a nothing question, but I said, what do you think Maple's going to look like in 5 years? And expecting like this like philosophical frilly answer, but you got to listen to it because Sid took it and just went pure numbers and growth and where he thinks they're going to be. I was sort of taken aback by that, just like the level of nuance he went to with leading us there with the actual numbers that could back up where Maple's going.
So on that note, just a quick reminder to subscribe at the-edge.xyz. That's the best place to get real-time notifications for anytime we release a new podcast or a new post through the Edge newsletter. You can also subscribe through our link tree at edge_pod. That way you can easily subscribe to our channels on Spotify, Apple Podcasts, or YouTube. One more quick shout out to all of our sponsors. Thank you to the sponsors who make the Edge Podcast and the Edge newsletter possible. So folks like TOROS Finance and REDSTONE. But otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge Newsletter. FALCON Finance, the team behind the fastest growing synthetic dollar, with institutional yields that are competitive and sustainable, offering yield optimized across your favorite DeFi protocols. Point season is now live. Learn more at falcon.finance. NEUTRL is the next generation of crypto native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is currently live in private beta and will be opening for public deposits soon. Learn more at neutral.fi. All right, let's introduce Sid Powell, co-founder and CEO of Maple Finance. Sid, welcome to the Edge Podcast. How are you doing?
I'm doing great. Thanks for having me on.
Let's start with just more about the vision for Maple. Talk to us about what was the opportunity that you saw in the market to create Maple? How do you differentiate from all the other DeFi out there?
It's a big question. So, I mean, if we go back to when we started Maple, Joe, my co-founder, and I were both working at a commercial lending company. So it did small business loans. And I think the initial idea was, could we do bonds? Could we access capital markets or present a way for smaller lending companies to access capital markets, using tokenized bonds? And that was super early. So, we're talking mid 2018 to early 2019 there. And so I think every entrepreneur kind of goes through this journey where you have your initial idea and then you have to adjust in the face of reality and what customers are or aren't willing to buy and to use at the time. And so how Maple's evolved is that over time we found ourselves gravitating more and more to direct lending to institutions. And so what we call ourselves today is Maple is the largest on-chain asset manager with a real distinct focus on lending to institutions. And the differentiated aspects of what we provide as a product have really been built around that kind of institutional audience. So if you look, the core product today that we offer is over-collateralized loans, and these are targeted at institutions because they are larger in size. So our typical minimum is about 5 million. And the fact that the institutions can use native BTC, so they don't have to wrap the assets, they don't have to put them in smart contracts, which is a pretty key differentiator for these customers versus what they would typically find in DeFi with an Aave, a Morpho, an Euler, or a Spark. And the other feature that we offer them is that they can put these assets, the collateral, into tri-party custody accounts with the largest custodians. So Anchorage, BitGo, Coinbase Custody, Zodia, we're integrated with all of these. And so that allows us to target institutions who just want to post Bitcoin to a custodial account in order to borrow a larger loan size versus having to wrap it, which for a lot of these teams, they consider a taxable event. So they don't want to do, and they certainly don't want to put them into smart contracts. And over time, what that has allowed us to do is generate a consistently higher yield from the loan book than what you see across most DeFi protocols. So I know that was a little bit long-winded, but hopefully it kind of covered some of the key differentiators.
One of the differentiators for me is I think of Maple as the connector between two very different audiences that clearly benefit from one another. One, of course, is the institutional borrower, like the DeFi institutional borrower, or let's call them borrowers who would just benefit from the coordination that happens on-chain through Maple. Meanwhile, you have lenders, which I know you've got, big-time money on-chain lending to Maple, but with syrupUSDC, you've opened up a permissionless product to those of us who would want to be able to lend to, the types of borrowers that are more reliable, that are going to be borrowing in larger size. And so there's like a gated access that you provide for us as lenders. There's a gated access, or maybe like a technology barrier for, new borrowers that can come on chain. What's the challenge in all of that today? I've always imagined that there's a BD engine behind the scenes with Maple that is the key, difference maker in what's helping you to grow long term. So
I think unpacking that in a couple of parts, I'd say that niche, as you kind of highlighted, that niche where we're straddling the DeFi distribution, which is for us is our syrupUSD product, which is permissionless. It's integrated with Sky, with Morpho, with Euler, with Pendle. Soon ideally Aave, as well as multiple protocols on Solana as well. So it's cross-chain. It's heavily spread across DeFi. So that gives us very wide distribution of the product. And the other part of our niche is connecting that with institutional borrowers who most of these, most users of the Syrup USD yield product don't have access to. They're not out there, entering large scale, loan agreements where they can get a yield from these institutional borrowers. So I think it is marrying the two that has kind of served as our niche and allowed us to really scale as we have over the past 12 months. Since the start of the year, we've grown about 8x in terms of AUM. And then the second part of the question,
you asked about the kind of the BD engine, and I agree. I think there is an extra special BD side to Maple that is a moat.
I would agree with that. I think people are often, reticent about classing things like BD or execution as kind of moats. This whole sort of traditional Warren Buffett, moat kind of concept. People have traditionally applied this to technology, like it's just superior technology or network effects. But I think people overlook things like just the type of BD, how effective your BD is, and and what your BD engine is. If I look back historically, there's a number of businesses where you would have said at certain points in time their BD was a real differentiator and secret to their success. I think the most notable to my mind would be IBM, back in the 80s. And then Oracle, who's seen a very recent resurgence, riding the AI wave, but they used to be known for their aggressive, very competent salespeople. So I would say our BD, we've tried to be different from a lot of other DeFi protocols. It's more institutionally focused. Everyone on our BD team, either comes from a credit fund, an investment bank, some kind of Wall Street background. They're less of your kind of typical DeFi partnerships team, which might have been somebody who kind of dabbled in DeFi and then, is sort of doing this as their first professional sales job. These guys have all done sales before, and they've all worked in Wall Street jobs. And so I think it gives them an edge when they speak with institutions, whether it's a traditional investment bank or whether it's a hedge fund or a family office. And I think using the other thing I would say is we have used the BD engine aggressively to kind of sell customers, whereas I think a lot of people had this idea as well that they're really selling more of a consumer product. And so they try and, they've tried to do, build it and customers will come. Whereas I think I was always struck by Peter Thiel's point from 0 to 1, where he said, you have to really focus on sales. You can't just build a product and expect that customers are gonna come out of the forest and start using it.
Sid, that's a great point on the BD angle, because so much of what happens with DeFi, on-chain, a lot becomes open source, and I feel like you kind of lose maybe the moat on the actual protocol sometimes. That's not always the case, but again, to that open source nature. So you actually need to find ways to have an edge. And I think what you said makes total sense. Like you've found these people that have already lived in these worlds before, and they're having these conversations with like-minded people. It's not, it's not a DeFi native 21-year-old BD guy likely that's at his first job. And that can work too. That's like, no shade on that, because you definitely want people that speak that language of on-chain as well. But for what you're doing, I think it makes total sense. You spoke a little bit earlier about some of the growth. I think you said 8x growth. Can you just break down some of the numbers for our audience? Like what is total TVL of Maple at today? Any other metrics you want to share? I think syrupUSDC's growth in and of itself is really really special as well. So yeah, could you just give us like an overview of where Maple's at today with numbers?
Absolutely. So if we look at the start of the year, Maple's TVL or AUM was around 450 million. In that time, it's grown about 8x to where today it currently sits at 3.6 billion. And this is across all of our products. Most of that growth, as you alluded to, Nomadic, has come from the syrupUSD product, which is our DeFi facing product, and that's over 2 billion in AUM by itself. On the revenue front, so just to tie the TVL back to revenue. So start of the year, we're doing about 400K a month, and so that would have equated to just under 5 million annualized. Fast forward to today, so at the end of August, we did over 1.4 million. So that was our largest single revenue month ever, and now we're on track for around 17 million ARR today, with a target of trying to get to 30 annual recurring revenue by the end of the year. And our revenue comes from a portion of the interest that borrowers who take out loans from us pay, as well as some yield from the collateral.
So Sid, speaking to those ARR numbers, can you sort of tie in how all of that maybe flows back to a Syrup token holder? Why should they care about Maple's revenue, basically, is what I want to know.
Yeah, it's a great question. So first of all, I think it's worth noting that Maple doesn't have separate equity. So there's no standalone equity entity that raised venture money into it and that has separate equity holders. Everyone on the team, all of the venture funds who have participated in Maple since the beginning are token holders, and so we only have the token holders. We only have the Syrup token, which ties together the entire ecosystem, and that is where all the economics flow. So currently, if you're a Syrup token holder, what would happen is that we can use a portion of the excess or a portion of the overall revenue we get. Currently, as of the last governance vote, this is about 25%. So 25% of that current 17 million revenue, or 30 mil revenue at the end of the year, will go to buying back the token. And then what we have been doing is using those repurchase tokens to distribute to stakers of the Syrup token. So that's how it ties together. But effectively, the token holders, the token holders are the owners of that revenue. So there's no separate equity entity, which I think was damaging for a number of other DeFi protocols and were relatively successful, but there was always this tension and this inherent conflict between the equity holders and the token holders. So for us, just once again, it's buybacks. So the revenue is used for buybacks of the token.
This episode is brought to you by MANTLE, pioneering a revolutionary new category called blockchain for banking by bridging TradFi and Web3 into one unified stack. With on-chain transactions, TradFi rail compatibility, and integrated DeFi features, MANTLE is reshaping how financial services work. Their flagship app UR lets users hold fiat and crypto all in one Swiss-backed account, making real-world finance usable on-chain. To learn more, go to ur.app and follow mantle_official on Twitter. Spark, one of the leading DeFi protocols, has had a year like no other, deploying $2 billion into RWAs with BlackRock's BUIDL and other institutional giants, adding over $1 billion in TVL, and distributing over $9 billion across the DeFi ecosystem. Now, Spark are setting their sights on further global expansion and have introduced the Spark token, which is available on leading centralized exchanges. There's never been a better time to discover Spark, the on-chain capital allocator. Learn more at spark.fi. There was an announcement in the past year that you're working with Cantor Fitzgerald. Clearly, they see that the future is moving on-chain, and I'm just wondering, where does that partnership originate? Why do they see the future of asset management moving on-chain? I think if you would have told us 5 years ago that Cantor Fitzgerald would be, committed to a DeFi partnership, working with someone like Maple, it would have sounded like a fantasy, something that like, oh, it's going to take like a decade for us to get there. Just tell us more about the why behind that. What's convincing Wall Street and traditional finance that DeFi is no longer this experimental, speculative sector? It's real, it's more capital efficient, it's the next generation of the work that they've done.
Yeah, the Cantor partnership is very, very interesting, and I think certainly a first within the space. You have this extremely, well-established, well-regarded traditional finance, brokerage and investment bank that's decided to enter Bitcoin-backed lending. And we were, Maple was, of course, one of the first partners that they did a loan to. So we're extremely proud of that relationship. But I think it signals that, Wall Street and traditional finance views Bitcoin as a legitimate asset and one where there is a distinct opportunity to use it as collateral and as the backing for lending in future, and that it's got the size, the liquidity, and the level of global adoption to support multiple billions of dollars of lending. Because if you recall from one of their announcements, they intended to do up to $2 billion in financing against it, which is big numbers out of the gate. Now, I can't talk to what they see necessarily internally in the future of asset management moving on-chain, but I can talk to what we see as far as on-chain asset management goes. And I think when you zoom out, if you just look at transferring money. So if I want to send you regular fiat, but you happen to be in a different country, it's an extremely laborious, costly process. When I send money, if I need to transfer money to my brother or to another family member, I have to take it out of one country, have it converted at extremely bad FX rates, and then send it to another bank account, where from that bank account, then I send it, to the final recipient. If we contrast this with stablecoins, you just give me, in effect, your financial email address, which is your wallet address, and then I can beam it to you instantly, whether you're in Japan, London, Australia, or the US, or sitting across from me at a table. It's as easy to send it around the world as it is to send to somebody across the table from you, which is not the case at all with fiat. When you look at something like that, so it's cheaper, faster, easy to access, and then you multiply that exponentially. So scale that to the global, financial markets where trillions of dollars are traded daily. That really adds up when you start talking thousands, millions even of transactions daily, and trillions of dollars being sent around. And I think so the potential cost savings there are enormous, and the potential to kind of leapfrog your competition is enormous. If we were starting Maple today using only traditional technology and we wanted to be a really big credit asset manager, we would have no hope. But in doing it and trying to piggyback this new wave of technology, so the movement of capital markets on-chain and being able to offer lower cost, better distribution, a faster product, I think it gives us an edge against those existing incumbents. And so there's three trends that I kind of look at that I think are tailwinds for Maple and that are converging with on-chain asset management. So the first is stablecoin adoption. We saw the Genius Act this year. We've seen Stripe and PayPal launch or indicate they are launching stablecoins. So we've seen strong Web2 adoption, and then we're even starting to see traditional banks consider issuing these. So stablecoins are here to stay, and they're going to grow exponentially. BTC market cap is growing because it's becoming more financialized, and also because governments have proved totally incapable of controlling their spending. So BTC market cap is going to continue to appreciate, and that's going to continue to be a larger and larger asset that you can borrow against. And then the third one of those three trends is private credit is growing. So there is more and more lending that is happening outside of the banking system and is being done by folks like Apollo, Ares, Blackstone, and soon Maple. And so I think those three trends, the way I look at them is you're going to see more private credit happening. It's going to be more lending against Bitcoin. It's going to happen with stable coins on chain.
Yeah, I don't know if in the final edit people will be able to see me while Sid was talking, but I was kind of sitting here nodding my head like this through almost all of that. So there's so much we could dive into there. I'm kind of curious, maybe going beyond where DeFi is today and thinking through more of these partnerships. So, we talked about the Cantor one, but to me, there's all these idle fintechs out there that need to level up. They need to get in the game. And I'm really curious how you're thinking about bringing them on chain, because it's obvious to me the yields on chain are better than off chain. And I think people there's this growing lindiness with on chain, and I'm watching it get more respected and weave itself into the traditional financial system. So yeah, curious, what are you seeing with these fintechs out there? Are you engaging in discussions with them and trying to bring them into your world?
Yeah, I think before getting into that, it's worth noting you made a really observant point, which is that the yields are better on chain, and I think that is true. Now, obviously, I'm biased in saying that, but I think it's worth kind of unpacking why that is. So, over the rest of the year, most of the market expects the Fed to cut rates. They expect it as soon as the next meeting. And what is going to happen once the Fed cut rates? So, when the Fed cuts rates, it reduces the discount, i.e. the kind of the hurdle that people need to hit on investments, which pushes up the price of growth assets. So, during COVID, when the Fed injected and the governments injected tons of liquidity into the market, it pushed up risk assets like Bitcoin and crypto. So when that happens, when Bitcoin starts to rip, the basis rate starts to pay more. And this, in the crypto space, is your risk-free rate that the market kind of rallies around. So what that means is that as the Fed is cutting rates, the spread that you earn in crypto yields is going to rise. And so crypto is going to become a more attractive place to deploy your capital. And that, that's going to benefit players like us, I think. So I think that's like one of the kind of the first things to call out.
Yeah, you're so right. So much of I even look at Tether, and Tether's kind of rise to prominence was also fueled in part by this rise in rates, right? Like I feel like that's in part what made them so profitable on the back end. I'm even curious like what happens to somebody like them, but when rates do go down. But I want to dive into more about the initial question I asked you. So you've set it up here, and I the writing's on the wall. Rates are going to come down, so this off-chain T-bill yield that everybody's sitting in is going to come down. And you've mentioned this spread is going to widen for the on-chain DeFi players. Yeah, what does that mean? I mean, I feel like we're going to see an acceleration of people coming on-chain, but that's my thoughts. I would love to hear yours.
So today, the additional reasons that you get paid a higher yield in crypto are premium. So it's a small space. There's far less liquidity versus the level of demand. So you're getting paid effectively a liquidity premium, a kind of new technology premium. And these all add up to a higher, effectively a higher risk premium that you get paid for lending in crypto. So how we discuss partnerships with Web2 fintechs. So I think a lot of these products are looking for high yield savings products, or that they can connect in with or integrate. And so that's how we pitch syrupUSDC to these potential partners. So whether they're launching a new chain, we can discuss bringing the product cross-chain to them. We've successfully launched it on Solana and then most recently Arbitrum. So the piping's already in place to do that with other new chains. And then the other thing that we can offer them is that for those Web2 companies who have who have institutional clients, we can also look at lending to those clients against crypto assets they might have. So whether this is, a Revolut or some other neobank that wants to offer crypto custody and crypto services to their clients, we can plug in as either a financier who can lend to those clients, or we can be a kind of savings account or high yield dollar product for retail or institutional customers of theirs. So that's been the big pitch, and I think more and more of these Web2 companies are trying to use DeFi ecosystems as a kind of differentiator, because then they don't have to build the products themselves; they just kind of connect in. So it's a much faster go-to-market for them.
You mentioned Solana, and there's been a real hit there with syrupUSDC. So Camino was the original hub of liquidity there for syrupUSDC. Now you've expanded to Jupiter with Jupiter Lend. We just covered them recently on the podcast. So you've got two major liquidity hubs now on Solana where folks are looping syrupUSDC. What are your thoughts on that expansion? I'm curious, what are your thoughts on Solana DeFi? Because I just know your roots are there in the most liquid Ethereum mainnet. It's a different profile of user, I think. I know there's some crossover, but I think a part of the story of success behind Maple has been this expansion to offering this liquid yield-bearing stablecoin on Solana. Solana, I felt, really needed you guys more than probably you needed Solana. So anyways, what are your thoughts there?
Very, very happy to hear that. But we also love the Solana ecosystem, and we're very eager to get over there. And we found a great deal of support among the community and the protocols there. So I think the foundation was fantastic. Camino, Jupiter, Drift have all been fantastic, as well as the Orca team. But I think looking at that, we were tremendously apprehensive about going to another chain. So I think there's any number of ways that it can fail. You launch, there's technical issues. You either don't have enough liquidity on the chain. So we kind of studied other assets that had been ported to Solana to varying degrees of success. What we observed was there is kind of a gap in the yield product or yield asset in the market over there. So you had, you had yield protocols that offered yield products, so there was Drift or Camino or Jupiter, but you didn't have assets that had high native yields embedded in them, unlike syrupUSD. And so what we did was we spent a lot of time kind of working on those partnerships. So we talked a lot with Camino, with Drift, with Jupiter, and I think the success came from having a coordinated launch where we had those integrations day one. I think if we just launched syrupUSDC onto Solana and we had not had those integrations, I think the product launch would have floundered. And so it was really going through DeFi distribution and trying to use those partnerships as really the growth lever to achieve adoption, awareness, and kind of support of the community. Because it is a very different community. Keep in mind, when we first launched there, Solana was going through meme coins. It was really kind of becoming almost like the equity capital market, and you had Ethereum sitting over here as kind of the debt capital market. And so it wasn't clear that you could necessarily stick the landing, but I think it's, I think the results so far over the first few months have been really good. I mean, the Jupiter looping consistently hits its cap within a couple of hours of it being raised. And then the other thing I think we're very proud of as a team is we were able to integrate Drift with Drift as well and offer syrupUSDC as yield-bearing collateral for perps trading. And you're seeing that narrative now play out in kind of these hyper-liquid stablecoin discussions, particularly in some of those pitches like Athena, where they're really highlighting the yield-bearing nature of the collateral there.
Just in case listeners don't fully understand how syrupUSDC works, can we just talk, really quickly about that? What is that pool of capital when you deposit USDC, if you're going to the Maple app, where is that money ending up? And then how is it used? Where does the yield come from?
Yeah, it's a great question, and sometimes we kind of skip ahead from these basics. But so for anyone who hasn't used syrupUSDC before, you go to our app, so maple.finance, and then you can deposit USDC. We also have a USDT version of the product, but for cross-chain purposes, let's stick with USDC. So you deposit USDC. You, in turn, are minting syrupUSDC, which you can take with you. So this is a token that is yield-bearing in that it accrues interest from the underlying loans. And what's happening is that your USDC is being lent to institutional borrowers who post collateral at an over-collateralized level. So think 150, 160% to backstop that loan. So under the hood, it is all over-collateralized loans to institutional borrowers. And the good thing about our institutional borrowers is, unlike retail borrowers, institutions typically always post collateral. Whereas what you find is retail customer behavior, often when they take out a loan, they will actually let it get liquidated because it has more beneficial tax treatment, and it's a way of it's actually a way of kind of exiting your asset tax-free, because the liquidations aren't treated the same as a normal capital gains disposal. So retail has a much higher propensity to kind of deliberately default on loans, whereas institutions basically almost always post.
There's also this concept of drips and committing your capital for longer. Can you just walk us through, like, what are the options there? How do you amplify your yield?
The drips program is going to be winding up soon, so I would say that anyone who wants to use it, get in while you can. But effectively, this was a bit of an additional incentive in drips, which can be converted to syrup tokens, and because we value being able to hold on to the capital longer, we can put it out into loans that earn more if we can do 6 months instead of 1 month. So if folks were willing to commit for 3 months or 6 months, then we were giving a bonus or a multiplier in drips. Nowadays, the other thing we do is if we're working with new protocols, whether it, when we've done the launch of new Pendle pools in the past, we will do multipliers for some of those new partnerships. So keep an eye out whenever we announce a new product partnership or integration. Often there's a drips multiplier associated with that.
And then on the looping side, just to complete the loop here, the pun intended, if you're on Camino or Jupiter and you are going to loop with syrupUSDC, a part of the magic there is that we're earning, I think today, around like 6% APY with just holding syrupUSDC. So we have this nice, competitive, healthy yield. And then every time we collateralize that, we're borrowing something like USDC or USDG. We're borrowing at a lower rate, and the looping then allows us to amplify and create this larger yield. So if that's the key to the demand for syrupUSDC right now, clearly there's a lot of folks out there wanting to loop with that yield. Where do you expand to next? Would you expand to an Ethereum L2? I was looking at the rankings of USDC liquidity, and I think after Solana, after Hyperliquid, we get to Base and then Arbitrum. So any plans to move to something like an Ethereum L2 next?
Yeah, so on the looping, you're absolutely right. So you have this higher native yield for syrupUSDC, which at present is kind of like high sixes. So think something like 6.8. And you're able to borrow at a lower rate through the lending protocol. And the reason that this is beneficial to the lending protocol, a lot of people might sort of scoff and say lending like looping is inherently risky and therefore this is kind of bad. However, the other side or the counter argument there is that lending actually makes the looping, I should say, makes the lending protocol more efficient, because by looping, you're actually bidding up the interest rate that you pay. And so the people who are depositing USDC are now earning a higher interest rate because it is being re-looped. And so the utilization is going up. So that's how looping is actually very useful for lending protocols and helps make them more efficient. And it's worth noting, looping was not invented by DeFi. Looping was actually very common in T-bill markets, in traditional finance. People would loop them hundreds of times. So then the second part of the question was, what other chains are we looking at? So we actually recently launched on Arbitrum. So I think that, that is de facto the first Ethereum L2 that we've gone to. But we are interested in working with others. So we have the help of Chainlink to manage the bridging of syrupUSDC, and they've been fantastic to work with. And so the answer is we're kind of looking at all chains where there is attractive TVL. I think mostly we kind of rank it by how much USDC is out there, and particularly given the success that we enjoyed with Camino and with Jupiter, we're kind of looking at where there are large lending protocols, because the natural fit is going to be send syrupUSDC to the other chain and then immediately integrate it with a lending protocol so that people can do looping, and that helps bring up the utilization of the lending protocol. It helps bring up the TVL of the chain, and it helps bring up our TVL as well. So it's kind of it's a win-win-win for everyone involved.
Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. RUMPEL Labs is revolutionizing DeFi. RUMPEL lets you turn points into profits by tokenizing rewards you can trade from top protocols like Pendle, Athena, Fluid, Symbiotic, and many others. No more waiting for airdrops or TGEs. DeFi's smartest investors are already using RUMPEL to unlock instant liquidity and maximize their yields. So join RUMPEL today and start spinning your points into gold. Learn more at rumpel.xyz. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions with battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs. Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi.
Sid, that's a really interesting fact you kind of casually threw out there about... So I thought DeFi kind of created the looping phenomenon, and this is me coming from a not TradFi background and being more of like a learning finance through DeFi for the most part. But I did not know that it was very common practice to loop T-bill yield. So that's really interesting. But I want to get into a little bit more of this chain stuff, because you were mentioning offline that I believe Plasma is going to be on your radar for expansion. Or can you speak to that at all? Like maybe what stands out in particular about Plasma, and any sort of strategy with how you're going to deploy there?
So with Plasma, so we will have an imminent announcement there, and one of the things a couple of things that have us very excited about Plasma. One, I think they've had phenomenal kind of brand awareness and execution in terms of the launch. You can see, how fast those caps filled up in the, in the kind of the TVL programs that they did. And so I think we have an expectation there's going to be, a lot of, very strong user adoption when they launch. We also like the USDT focus. We are predominantly USDC denominated when it comes to the loan book. And so adding USDT gives us kind of more of a foothold in Asia, where it's more prevalent, and gives us a little bit more global reach. And for us, it's always been kind of an underpenetrated market, because we haven't done much lending there. We view it as kind of a blue ocean in terms of, a place where we can find more borrowers and really grow the TVL. So the USDT focus of theirs, very important. I think the fact that they want to be a stablecoin focused chain and ecosystem is also tremendously appealing, particularly when you consider the kind of the network effects behind USDT, and the fact that that Tether /Bitfinex is kind of involved and a key backer of the chain, the ecosystem. I think we consider that very attractive. And we've just been, I think we found it, a very good experience working with the team as well. So what we are looking at for that launch would be a pool of syrupUSDT on Plasma. So it'll be a pool that people can initially deposit to, and then as we get up and running, that will then go into deployments in the institutional loans. So we'll start then, lending out that USDT to the same type of institutional borrowers. So it'll be the same high quality institutional over collateralized yield that we have in syrupUSDC, but it'll be now available to the Plasma ecosystem, and you'll have the ability to loop that in certain vaults on Plasma and lending protocols.
Very cool. Yeah, we actually just did a podcast with the Plasma founder Paul, so that I think will be out by the time people listen to this. I think it should be out. But one other big thing I want to talk to you about. I saw a while back a forum post for getting syrupUSDC on Aave, and I ended up writing a thread about it. And in the process of writing the thread, I became pretty bullish because I think I hadn't stopped and looked at what the Aave listing can mean. And when you look at what happened with Athena, not to say that this would be a one-to-one comparison, very very different, but the Aave effect is absolutely massive. It's kind of like, I think, like almost like a gold seal or like of approval in DeFi in a way, right? So maybe speak to where you're at in that approval process, what still needs to happen, and then what do you think it means for Maple getting listed on Aave?
All good questions, and I definitely kind of agree with that point around it almost being seen as kind of like a gold standard of approvals within DeFi. So obviously they have they're the largest lending protocol in the world, largest DeFi protocol in the world, and they have really excellent reputation and global reach. So in terms of the approval process, so we have been working with with the risk assessor team. So I think Aave has a very robust process where they have three outsourced risk assessor companies that will file a report and do due diligence on your protocol, and then it of course goes to a protocol vote. So I think we're getting pretty near to the point of a governance vote on it, which would be exciting, and that will ultimately be the final step in the approval process for us. However, just kind of departing from the process and talking about what it would mean, I think like you, Nomadic, I've looked at the the growth of Athena since they got approved on Aave, and I think what we'd be looking at is kind of similar, maybe not the same magnitude, but effectively what it allows. The really successful mechanism it enabled for Athena was looping, and the successful mechanism we would be looking for is to see people start looping syrupUSDC on Aave, and as well looping the PTs. So I think when I was checking this morning, it's something like 6 billion when you include PT USDE, PTS USDE, USDE, and SUSDE. So it's a monster amount of TVL that's come from that partnership. And so I think if we can achieve even a fraction of that, it would be an excellent outcome for us. Even 10% of that would be 600 million, which would be pretty substantial growth for us. And if we exceed that, well, more is the better.
Sid, what other major things are you excited to be working on?
So for the rest of the year, we have a pretty full docket. So one of the things that the team is working hard on the engineering front is syrupBTC. So this is going to be our yield-bearing version of BTC. We have an OTC BTC yield product, a lot of acronyms in there, OTC BTC yield product, that we've been running since February. So that has produced yield from staking. And what we've wanted to do is similar to how we had initially an OTC, OTC permissioned stablecoin yield product, and then we progressed to syrupUSD. We want to do the same progression with BTC. So we have the OTC product, then we're going to build syrupBTC, and this will similar to syrupUSDC be available throughout DeFi and integrated with lending protocols. So I think one of the opportunities we see is allowing it to be looped. So borrowing rates for WBTC are very low on most of the DeFi lending protocols. Think less than 0.4%. And so it means that if you can earn even 1 to 2%, you can get a very powerful looping dynamic where people could loop up to 5% APR on Bitcoin. And then under the hood, we'll have the ability to have multiple deployment strategies for to generate the BTC yield, which has of course been one of the big challenges. So I think this is really exciting because I don't think you've ever seen widespread yield-bearing BTC on chain before. Certainly not that's kind of outlasted just a very basic kind of points farming period. And so this is one of the products we're very excited about that we hope to announce soon and launch soon. And then I think really that's kind of the biggest marquee thing for us. We've talked about Aave and some of those other deployment partnerships that we've got in the works.
Also, real quick, did you say the yield that you're targeting on that? I heard the looping yield, but what's the standalone yield that you think? I think
if we could get somewhere around 2%, that'd be a nice result. I think if you get 1 to 2%, it's workable. I think if you exceed 2%, it's fantastic. Because remember, this is liquid. So, and ideally at the scale we're talking, it's no small task to kind of generate that yield.
Talk to us about where does the syrupBTC yield come from? I just want to understand what's the profile of the borrower who is, ultimately, paying to borrow that BTC.
So I think in this case, it's actually very hard to lend out BTC. So, what we found is that most BTC borrowing today is unsecured, and that's typically, between, call it like 1 to 3% kind of interest rate. So we to generate BTC yield, you're either going to do staking, which is what our product has been for on the OTC side over the course of this year. So we worked with CoreDAO to have a staking product. So you can either do staking, you can do lending, you can do call overriding. Lending and call overriding I don't think are suitable here. You can do volatility trading. So this is where you work with a trading firm to just kind of have a delta neutral position. And then the other things you can do are like basis. So I think we're kind of looking at, of those, we're looking at staking, the volatility trading, so working with market making agency, and then the other one being basis and using futures to kind of generate delta neutral yield. So I think the deployment strategy is still to be finalized, but you're looking at kind of a target range, let's say in that in that 2, sort of roughly at that 2 area, maybe between 1 and 3, kind of depending on how the market looks. But we think at that level you can have the looping on the prominent lending protocols that would be needed for this to really scale and to be appealing to users. But I think the key is you gotta have rock solid risk management behind it so that enough of the market is kind of confident in using it. And you got to have a strategy that can be scalable as well. So that's where things like basis come in that are obviously used, to the tune of billions of dollars today.
Sid, what do you think Maple looks like in 5 years?
So we often talk about, traditional asset managers who have a real focus on credit. The names that come to mind for me are Apollo, Ares, Blackstone. And so we see Maple, evolving and growing to kind of rival these players in size. And we think the trends around that are going to be driving that are really going to be stablecoin adoption, continued tokenization of assets, and continued growth of private credit. But just to kind of put some numbers around where Maple could get in 5 years, I think it's worth highlighting that we are laser focused on, this lending against large cap crypto, so BTC-backed lending. And I think there's not a lot of pressure for us to kind of expand into too many different disparate horizontal products because that BTC-backed lending has so much runway ahead of it. If I look at it today, the size of the market is there's about 20 billion in BTC-backed loans out there. BTC market cap was around 2 trillion, give or take a little bit. And so you're looking at roughly 1% penetration. how I look at the next 5 years is I see Bitcoin doing at least a double. So you're looking at a $4 trillion market. I think it's not an edge case to think that the penetration of lending against Bitcoin could go from 1% to 5%, which is kind of commensurate with equities. And so then you're looking at 5% of $4 trillion. You're looking at a $200 billion Bitcoin-backed lending market. Today, Maple has about 5% of the market. We run a book of just over $1 billion on that $20 billion. So if we can grow our share from 5 to 10, then we could have a $20 billion loan book over the next 3 to 5 years, which is producing 300 mil annual revenue run rate. So for us, our take is generally 1 to 1.5%. So you're looking at up to 300 mil revenue run rate on that, and that's just the BTC lending side. That's leaving aside things like syrupBTC, which would be additional to the upside. So, I think there's a tremendous amount. I think BTC is going to be kind of the store of wealth asset for millennials and Zoomers, and so I think there's a tremendous amount of growth built into that market, and that's really where we want to kind of focus and dominate. So Maple is going to be on-chain asset management with a real focus on credit, yield, and lending. And we're going to ride that technology wave to kind of rival these established players in TradFi, whether they be an Ares or Blackstone or someone else.
You know what I love about Maple is you guys have been working at the same thing for, I think, going on 5+ years. Clearly, you had
over 5 years now.
Over 5 years, which is the entirety of DeFi's lifetime. You work on hard problems. You are, as you put it, you're laser focused. You want to be the best at what you do. And I think sometimes this space breeds this mentality of working on multiple projects at once. I think this is the standard to be set. And I'm feeling extremely underexposed to syrup after all of this. So I hope listeners listen carefully to this. This is, I think, a great sort of inspiration for, what can and should be built in DeFi. So anyways, keep up the great work, Sid. And I think this is a great place, though, for us to wrap up. So I want to remind our audience they should learn more about Maple by going to maple.finance. Follow Maple Finance on X. Follow syrupSid, which is Sid's personal account on X. We'll put that all into the show notes so you can easily find those handles and website. And then, Sid, thanks again for your time. Such a pleasure to have you on. Really excited for the syrupBTC product. And if folks listen to that Plasma podcast, I think they'll understand again, this focus with syrupUSDC and syrupUSDT and, all the possibilities there with, that stable coin growth. But any final word for us?
No. I think, thank you for having me on. It was a real pleasure. And you already kind of ran through all the socials, so I don't need to do that for the audience. But thanks again for having me, and I hopefully come on soon to kind of talk about the follow-ups.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.